Hi guys, welcome to another weekly market analysis. It's been a little while since I've made the last one. I'm going to do something slightly different here, always trying to evolve to make it easier. So it's more concentrating with the Discord group. Let's look at the majors only, and let's look at the euro dollar as if we want to drop down and do some day trading, a bit longer term, it's kind of swing day trading, not scalping. But I will point out if there is some setups in the Discord group that I'd like to take, if we've got a decent reward to risk as an intraday trade, but that'll be as the week goes on, because price is always obviously moving and changing much quicker using 15-minute and 60-minute and 1 minute and so forth. And I'm going to try to follow some of the lessons here. I've not made the video lesson on the trend pullback setup, and I've not done the candlestick timing yet, but the timing really you can kind of say it's a bit irrelevant if you're following the patterns, but it can help you project what you're expecting to happen, and so whether you want to take a trade or not. So you can use it as a rule. If you get the green light, it does what you projected, then you definitely take the trade. If it doesn't, maybe you don't want to take a trade. So candlestick timing is quite good. For example, if we're looking to short the market, the euro dollar this week, then maybe we're watching the weekly candle. So we're watching the weekly candle. If it looks like it's going to close by the end of the week, creating some big wicks, it might drop, come back up, then we might not want to be shorting for a bigger target. You will use that timing to only trade lower time frames like the 15-minute or the 60-minute. At the same time, we can project that if price rallies very quickly, as another example, let's go. So if we open, drop a bit, and then rallies up here by Tuesday, Wednesday, my projection would be a reaction to the downside in a very similar fashion, possibly quicker as the trend is down. Maybe we're going to break some of these lows here. And as I know where I am, I'm also watching that if we come into a possible fake out and reverse. So the candlestick timing can give me an idea of which kind of setup I might want to play depending on the pattern on the lower time frame. That's where the candlestick timing can come in, but you need to identify the patterns, and we can use these counter trend supply and demand, trend supply and demand, trend line breaks, trend line touches, ABEs, the patterns that could form. So we're looking on the lower time frame for these, so then we can project where we think market can go, and also to play it safe in case we're going into sort of traps, fake outs, liquidity sweeps. So maybe you just want to play it a little bit cautious and not take the usual setups because we're expecting this to happen. So you need to be aware of all these kind of strategies within these structures, within the supply and demand, counter trend supply and demand, chart pattern, or just high time frame. How can I say high time frame candlesticks with the timing. So we'll look at all that as we're going through the charts. So let's start with the euro dollar, and we'll work our way through the majors doing higher time frame, long-term position swing trading. I always start with the monthly. Now this is what we've got, and we're going to use on the left here this information. Then I can use this information here and see which one of these might be the better one to trade. Which setup might be better. Are we going to look for traps? Are we going to look for momentum, a trend line setup? Maybe we're keeping an eye out for all of them, and I'll talk a little bit more of this timing for projecting. So if it does what it's supposed to do, then we know which sort of setup to take. And the trade management. So although I've not made the reversal setup video, I think just the reversal setup video I did do, the trend line breakout, all the difference in these are trade management, what your expectations are. The patterns are always the same. It's just the expectation of how to manage it. What you would do if momentum, for example, you don't necessarily have targets, you've got to manage it quickly, and stuff like that. It's all good stuff. So let's try and break it down very slowly. Monthly, we have got this break of this trend line. We are into a monthly, this all is kind of monthly demand slash range. It looks like it's trying to roll over, but we are in demand, and we are into possible fake out of this demand, and even this lower demand here. We don't have closes above. So if you think about the, let's start off with the chart patterns here. We're looking at inside candles. So we had some here from this high to this low. In fact, we can look at this low. So we're in some kind of big range that's going on. And if you want to trade the monthly, you want to be buying down here and you want to be selling up here based on this chart pattern. So we're near the low. So the longer term trading, you'll be looking at maybe a monthly and a daily. Once we have a break on the daily to the upside, slow long term trading might be buying down here and exiting a position at the solid bodied candles here, okay, the upper end of the range. So this is what we're looking at the moment, one big range. I'm going to put these all my drawing tools on here. It's kind of missing. Let me just open this up for one moment. I didn't want to do that. Let's do this just for a moment so I can see where, move that to there. I wanted you to shrink down. Okay, let's move you over. This is what I wanted to do. Right. So here we are. So we're waiting for confirmation that price is turning down here because of this structure. We don't know if it's going to break and continue lower. We are candles definitely on the verge of closing on this monthly below here, which could mean next month we open and move down lower, and it could be into some form of high time frame break or trend to the downside. So if I'm using the monthly, I tend to go to the daily, and this is what we've got. We've got the daily downtrend. Let me reduce the candles. A, B, and a possible E entry at this trend line. That was the fresh and original level. It's kind of becoming out of date. Right, if price rallies so hard the next couple of days, I'll be looking to short in this area. But I'm going to use a confirmation because we're now moving away from this, what you would call a set and forget area. We're starting to move, so we don't know if we're going to break and start the break to the upside and price start rolling over to be going long. So if I use the drawing tool, just to give you an idea what I'm talking about, I'm kind of expecting big daily candles up like this, and then on this structure that's moving up on a 60 or 240, we're looking at a break and then a possibly pull back to move down with a target down here. This is the trend, and this would be the E entry on this A, B pattern so far. Okay, so this is what we've got. That could potentially happen. So my timing is going to be quite volatile. We're looking at, if we look at the candlestick timing, then in the week I'm looking for big moves to the upside here. Okay, if we get up here slowly, as in day by day, and it grinds, the weekly candle might close green, but it's still a potential shorting opportunity. We'd have to wait for the following week for it to start to break. Okay, that's what I would be waiting for. Even a potential fake and drop, but I would be waiting for some kind of confirmation next week. So I just wanted to point that out. So let's look what's going on the weekly. So at this A, B, possible E entry here on the weekly to turn. So if that is the case, and I'm just going to make sure I draw that in because we're in a bit of a range here. So it's a bit of an A, B. That was also an A, B, E. That broke. And this is kind of a trap area at the moment because we've not broken this E entry. Okay. This could be that big sort of slow range. Remember, we're talking about the monthly range we got near the low, but it'd be a little bit aggressive because the daily hasn't turned yet. But if we're using the weekly at this point, if we're trading weekly 240, we go to the 240, and I want to reduce the candles for a moment. We have got a break of this structure initially, but we've also faking out from the low here. Okay, we have made lower lows. We're faking out, but there's not really much of a close. So there's a lot of rejection going on. So if we look at these candles, we need to adjust this to here. This is that high, and this will become, let me just clean all that up. This will become an A and a B. So the area I've got to be careful of is something like this to continue to the downside, E. Okay, if we start to break this area, this E, then from the weekly 240 perspective, we might have a pullback and then a rally to the upside. And then it might break, if I clean that up so you understand that, then it might break the daily. It might start to attack the daily trend line. But my profit margin, whatever I buy for, at least my final target, or even if you want to manage it, at least part of your position should be removed before we reach the trend line. And then we want to see what happens. Are we going to continue? And maybe we've got some kind of 240 uptrend on this daily. So we might start to break this. I'm going to open this up big time for a moment. I just want to point the big daily trend line on the 240 chart so you can see what I'm looking at. So this is this daily trend line. So if we start to break above this, we're pulling back, we want to target somewhere before that trend line. Okay, either a third of your position, let's say you have two targets, the second target here, and then you might leave a little bit on a third. So you take off a third, and then you might want to manage to see if this continues up. And you just hold that for the next month or two. That's another potential possibility. Until we break this daily, though, I'm considering downtrend, which is why if we're going to start to buy, we break this 240 and buy, we need to have room. We need to have room to buy because it is counter trend on the daily and the monthly candle. But bearing in mind, low end of the monthly range, therefore we could start to break. So we want to find decent targets and decent trade setups and not be too greedy at the same time. And we want to reduce that risk, but using confirmation trades. I'm going to use confirmation, which is why we've got this. So at the moment, if we analyze the daily itself, and what I want to do is, bear with me a moment, I just want to move so we can see what is going on. It won't let me move. There we go. I just want to get that over, adjust this so we can keep reading what is going on here and find those setups. So what I'm looking at the moment is an ABE on the daily. I'm looking at a 240 ABE here because we could react here, and if we get a break, then I'm looking at basically a trendline break setup, which will be from the 240 up until the daily trend line, that area. We could have a breakout, which means then smaller targets, and it'll be a day trade kind of setup there. Longer term, we get up to here, we look into reverse. I want to see what's on this 240 in this area. Okay, so price rallies, this is a trap area because we've got a lot of range candles, which will be the daily inside candles. So I'm just coming down multiple time frame analysis, and sometimes trend lines are not accurate, don't worry about that for the moment. And we've got a couple of inside daily candles at the moment, these two inside, which shows rejection and a range, okay? So price is rallying to the 240, there is a trap area here, okay? Target one, or at least a decent party position will be removed here. hoping for a breakout. Now, if you're doing confirmation trading, you don't want to be trading until you're below this low, because we don't know what's going to happen on this daily. So we want to be trading, and really ideally a daily close below here. So the Monday, and then the Tuesday we can start to look to continue shorting for day trades. But at the moment, anything above this line, we need to be far away. So we need to be at the ABE, the trend line area, or into some form of supply. And there's plenty of supply above. We've got a supply level here now on the daily that price could just react from again. We need confirmation because it's not fresh no more. So we need to come up, hit this, let me remove this trend line for a moment, hit this trend line, and then we're going to use a daily 60 or daily 15 or daily 240, whatever the structure is up here, we need a break. And if it goes beyond, we can look at a potential breakout up here, potential breakout, or wait for the breakout to happen and a pullback to continue long. And we can do the same on the 240. So you're starting to take your targets a little bit shorter. The movement's going to be a bit quicker. We're using the 240. So if we get above this 240 area, that means the fake out or the trap area is not working. Price is going to start to close above, and then we're starting to look for small pullbacks to rally towards that daily trend line. So there's a little opportunity here to go sort of long, and the reversal is there. Think about it this way: I only want to be targeting like the dartboard, you know, the big 20. You've got the double, you've got the treble. I want to be looking at these areas in a very neutral bias. It's either going to break or reverse or fake or fuck about and create a range. And then you can use the candles, the chart patterns, to understand that when we're looking at a range, we don't want to be trading in the middle of that range. We want to be buying down here and selling up here. We want to fake out below here or fake out up here. We want to break down below here or break up from here. And then we look at the high time frame candles. In this case, it will be the 240 in the daily. And we're looking at chart patterns. We want to work out, is there a trap above? So that's what I'm going to do now. So you're up to date. So I'm looking somewhere where price would rally, somewhere in this kind of area. So if I come down slowly to a 60, we've got this big movement down. Let's have a look if there's anything in that 60. Big wicks. Let's go to a 15. We have got this rally, pivot, drop. Okay, so this area, this was already a trap area that's played out, and that's in the Discord group. Okay, that I was looking at. I drilled it down, but that is the whole area. Fresh and original, drop, base, drop. Okay, now the trap, that was a trap above these highs. The trap now could be here, and it could align with an ABE. Okay, so I want to look in this kind of area. 0717, 0697, 0717. Just going to get this on for a moment. 0717, because we can't see it, so I'm just trying to map the area. Is it going to show on the 240? No. Okay, let's put the upper line in at 0717. Over fraction. So this is an area that I'm looking for. Price rallies really hard. If I go to the 240, you see where the green line is. Rallies really hard. This could be a fake and trap area, and that is my 07. I'll leave it around about that sort of area. 0710, 0711. So this is a fake. If we start to close above here, yes, we're into supply, but it's a trap. Again, we're looking for a breakout because all the stops are going to be above here. So if we entered on a pullback, so price closes above here on a 15, we might be able to pull back, buy for a continuation. Also, price might retrace all the way to the lows. I'm going to be looking at the extreme. Okay, this is this area or here, not in the middle at the moment. Not in the middle. This is a trap kind of liquidity sweep fake out. I want to play at the extremes. So this ABE looking to short. If we don't get it, we could be, because that could be the trap. If we don't get it and it closes above or you get stopped out, then I'm going to look for momentum. Okay, momentum, and the momentum's going to take me up from here towards the upper end of this daily level, which is another E entry, and then I'm going to do the same again. I'm going to watch the structure. So if I've been stopped out on a short on the lower time frame, that 240 area, I'm going to watch the structure, draw another trend line, wait for confirmation. So that's how I'm looking at it. It's quite complicated, I understand, but you have to read the price action, what's going on. You need to understand that you can't trade what you feel, you need to trade what you see. My talking about long and short is not a feeling, it's in the area and I'm looking at the right structure. Okay, and then I can minimize my risk by following the patterns of an ABE, momentum, by managing the trade differently, which is what I'll do if we break from the 240. And if we reversal, am I going to take head and shoulders double tops on the lower time frame, or am I going to take a confirmation, which will line up with a head and shoulders, by the way, a confirmation, or we're going to take a breakout to the downside. You know, we could do that at an ABE, momentum style trade. There is so many options. We just need to wait as price plays out to see what happens. The markets might open and gap down and close down here. So then none of this would be irrelevant at that time. What we'll be looking for is a continuation to the downside or a reversal. And we've already spoke about reversals. We need to really close above this 240. So we need to close above this 240, and then we need to obviously get above the daily. So everything is down at the moment. The daily's down, the monthly candle's down, the daily's down, but we are into a monthly range. And this is the lower end, and we're into a daily range here, 240. So we're in the lower end. So buys would be down here. So let's have a look what could happen if the market opens. There's another projection here. The market might open, it might gap down like this. This is the fake out area. So I'll be watching the structure here, even if it goes just beyond it. If we suddenly come down, close above, I've got confirmation in that area to look for longs. But where's my target? It's going to be the solid body candle. The chances of that breaking out could be low, because we might have a fake out, could be low. So I would take off, you know, at least 50% of your position here, and your stop will be at break even. And so you do that kind of trade management. So if your stop was initially here, you take off at T1 here, then you want to move your stop to break even, because we're expecting that. That's the whole point, what your expectation is. And then I'll be watching the candlestick timing to see if I get that. Okay, and if not, I might watch the structure, because we start to push up like this. Let me just delete that one. A little bit better. If we start to get a structure like that, then I'm going to manage my trade here. There might be a pullback and continuation. We might be drawing a more of an uptrend like this. Now you can manage your stop below here if you want to be conservative. If you think it's going to go for the big monthly target, you might want to leave your stop there. You might want to manage it here just because you'd rather get out of it, because it might reverse with this big fake out and price continue much lower. So we don't know. We can only manage what we see. And if you want a better reward to risk, you really want to just get in on here and hold. And then the trade management would be, if I'm looking at the monthly, let me just clean all this up. Let's go to weekly. If we're looking for price to rally, and that's that monthly target here, you go to monthly candlestick, you'll see it, solid body. So if you're going for that kind of target, so we're looking at 0.650 area to 0.950, okay, 300 pips. You want to hold, you move your stop to break even once prices reach 50%. Okay, that is pretty much my standard pattern. If I've got a pattern like this, I've got a target, I'm at a range, I want to go for here, stop goes to break even at 50%. When price moves to 80%, stop goes to 50%. because that's when I'm trading the extremes. If I'm trading the extremes, that's my trade management. Because when price starts to go, there's all sorts of fake outs, traps, reversals going on lower time frames and reversals again, creating liquidity sweeps and all that. But if you get in at the extreme, you just hold through that. Let price starts moving above 80%, you start to move your stop then at 50. Okay, price moves to 50, you move your stop to break even. You need to give it some room. You've got to accept the trade, accept the loss, and just hold. So that's potentially what could happen on the euro. And if we start to, like I said, break below here, we start getting daily closes on these weekly candles you see here as it comes down, daily closes, maybe we're going to continue. So let's have a little look at that scenario of continuation. So we've done the low here, fake out kind of area, low end of the range, catching the extreme, and it could move a damn sight higher, 300 pips. It could be a nice one to hold. So if you do buy down here, maybe take a further position off, a further position, let it break and hold a third for the bigger target. That's a good way to manage that by confirmation. So if we're going to start to break and close lower, I'm going to watch, more importantly, maybe on the 240, because this is a 240 range. If we get a 240 candle close somewhere below these lows, then we're looking at possible pullbacks to drop. Target 1 is definitely going to be at the lower end of the solid body candle here. That would be target 1. And then we might have a drop, base drop, base drop. That's another scenario. So we want to look at the different scenarios that might happen. So we might get a close below, a small candle, a base, and we could have a reversal, or it might just want to drop. So in this small base, we've got the range because we've got an inside candle. So we're looking at the upper end too short to go down of that range. That 4-hour inside candle is going to be a 15-minute range. So we want to here, we've got to look for fake outs as well. You've got to be aware of that. Liquidity sweeps up and then drop. So there was a couple of scenarios. I won't know what's going to happen until the market's open and as the week plays out. So that's why I don't really chase the markets. If I miss a trade, it's fine, because we might end up with a bit of a fake here, a strong rally, and then boom. That's what might happen. So I know I've always got my A, B, and another E somewhere here. The most important thing with confirmations is you're watching for breaks of trend structure like this. Look at this here, breakout. That's momentum. Same here. The trend is down, breakout. So what we're looking for here, breakout, because that's what we've got, range. We've got a trend line A, B. So we closed down like this. You've got an E area entry. So if you're trying to fake it, you want target 1 before that, target 2 before that, and then target 3 you hold for this area. And then you can have different trade management for target 1, target 2, and target 3. So the idea is that you're looking at all this kind of information here. Ignore that. Let's come on to this. And what I'm talking about then is once you understand all of this, you understand the multiple time frame analysis, and you know where to put your entry stop targets, you know what your risk reward is, you know your trade management rules based on all of these. And remember, each part of your position could end up being a different sort of trade setup within one big trade. And then you can post your trades and journaling, you understand it. We can look at reviews from that point. We understand the psychology, but then what we're using here is the advanced trader intuition, okay, based on confirmation. And what is confirmation? Trend line breaks, closes and breaks, okay? You're waiting for that, and you're then looking within that for the pattern. So, for example, you might be waiting for a momentum setup on the higher time frame there, boom, boom. But you're going to use on a lower time frame ABE. You might look at a trend pullback setup. You might look for the reversal double tops, double bottoms, or you might even look for this within that momentum higher time frame setup. So this is what I'm pointing out. Lots of scenarios. It's getting quite complicated, but I want you to understand that I am literally listening to price. At this moment, we've got this range. If we look at the patterns, like I said, the breaks, we're waiting for a break below here. okay, for a breakout. So therefore, this could be fake out, breakout. This is areas I want to trade. Support and resistance is very similar, really, if you think about it, because people are looking at the support and resistance. I just look at it a different way. I like to draw up my scenarios, and then I want to look at some of the projection of price movement to understand which one looks more favourable, which one looks like the best opportunity. And therefore, with the projection, you can also understand where you want to remove most of your position, at what target, how much, whether it's 50%, 33%, maybe 80%, and let 20% run. You can make those rules up yourself, but you need to understand you don't want to be greedy and just hold the position up to here if you're not getting the right signals down here. Okay, that's all it is. And you can really move into it, because if you've already got into a trade and you've taken off some of your position and it's starting to break, then you can start to look to add, maybe as an ABE, add a new position, take off 50% here and then let it run. Manage that part of the position differently than the one that you originally entered. So you could have two trades in that direction, completely different trade management. You know, that way you're actually minimizing your losses, you're locking in some profit on certain trades, and you're allowing room to breathe, to go, and your account will slowly grow that way over time. So that's the breakdown pretty much of the euro. The rest of it I will post in the Discord group. Just as an example, because people think, what the fuck are you talking about? That looks so complicated. Yes, I know it does. I've got a new trader joined recently as well, been posting, which is Asta A from India. He confusing the fuck out of me sometimes with the way he's doing it. This reminds me of the old-fashioned what you see all over YouTube, you know, areas of value and all this crap. You know, it's fine, it might work for you if it works. I'm not saying that it doesn't work, but I like to keep it nice and clean. It's already complicated enough when I'm showing you what I'm showing you. So as an example, this is my writing. When you start seeing it, I'm doing this on my phone. This was the let's have a look, let's go back a little bit. It's important that you look at this, you understand I'm talking about where we can get in aggressive, or where a confirmation is. Aggressive, confirmation, know the difference. So when I was looking at euro dollar, we're looking at a double top setup here, and that was one particular. So I'm projecting where my target one would be and what is momentum and so forth. So I'm trying to combine everything. Yeah, so where was the one that we... That was the ABE from last week, ABE, and it hit the target. Some of these I've not actually traded. I've not got time. I post it. Flag break, measured move. I'm talking about the break here. So be careful about trying to short in these areas, because we've already had the move played out. So I'm talking about being patient, rejection wicks, and what I'm expecting. This is all to do with timing now. Where was the one I posted with the... I'm looking for the trap. Talking about diddling in the middle. We want to be trading where the extremes are the patterns that we're looking at. This is the trap I was talking about. Lots of scenarios with different strategies. So what I'm talking about here, I'm just going to enlarge this if I can get it any bigger. I can't really get it any bigger than that. But on here, it was a 15-minute, and there was a drop, base drop, which I showed you at the very beginning of the video. This is what could happen. We could trap and drop. So I want target one here, because this could come up, come down, and then continue higher. I didn't know if this was going to break. The trend is up on this 15-minute. We could end up with a pullback to here and continue higher. That's why I had target 2. And in the end, it actually reached the target 2. So wait for the lower time frame trend line break in this area. That was the safe bet. I was looking at a 30, okay, but showing the target areas. So Asta A pointed out, yeah, I can understand your marking, thank you. So he knows where the T1 is, and so forth. It was talking about the pound dollar as well. And in the end, price did touch this area and reacted. Target 1 would have been hit and target 2 was here before the trend line. You can have it a bit lower for a third target as well, but I kind of erased that and was trying to be cautious. So now we're marking this supply level, hoping price drops to target 2. So what we was looking at is that once this trend line on a 1 minute was broken, the demand was removed here, supply is in control, and this is where we would enter the low risk, and this is all your supply level, and which is what I've drawn up here on a 5 minute. So target 1 is what you're aiming for, and target 2. And entry, thank you for teaching me it. Yeah, M1, M15, M1 confluence. That's good. It's all the same stuff. Repeat. Your trading setup target hit. Yes, I know. Mananus wants to know where my lesson 7 and 8 is. Yeah, sorry, Mananus, I just not got round to making them. I'm just too busy. So that's how I'm doing it in the Discord as the week goes on. Let's come back to this. So now I've pointed that one out. Let's go and have a look at the bigger time frames, see if there's anything big on the monthly pound dollar and the weekly. So we've broken this momentum, definitely broken this momentum to the upside. You can even draw that line to there. We've also broken this. When the momentum's broken, this trend line's broken, this is a potential pullback to rally high. I do not know when this is going to turn. When we get these crisscross kind of things happening, and the monthly hasn't closed, this could be a fake out at the moment, a fake out, which will go with our euro dollar long trade. It could be a breakout. So I need to look into this area a little bit more. So let's use the weekly break. We're in this momentum to the downside. The weekly candle closed low. So we could be breaking out and dropping. This could look and just, whoa, really extend lower, or we could reversal. So let's go to the daily. There's the daily trend line, same as the euro, but the close below on the daily and the weekly is here. So we've got this momentum. Where is a nice area of supply, which could align with the trend line, which would be nice, is here. So price comes back in the next week or two, into next month, especially if we close down here, monthly red candle, we could rally and touch this area, this trend line, and reverse. So the structure here is down. So if we want to get on board a momentum, because this is looking better, then I'm going to look at my 240, see what's going on. This is that big daily. So everything is down. You just need to know where to get in on the momentum and when to stop trading, because price might be changing direction. You know, a deeper pullback, retracement, we don't know. So day trading, you really want to be getting up and price rolling over before I start day trading to the downside, or I've got a day trade momentum. Okay, and that's really dropped quite a way, and you could get some nice moves on Monday to the short side, and then it fucking snapped back. So you need to manage quite aggressively now. The lower the time frame, the more aggressive the management. So this is the 240. I'm going to remove these now because price has already done all that. I have to refresh. So up to here is a nice ABE. I'll be watching the area. Is there anything in this gap down here? Let's have a little look. We have got a bit of a drop-based drop in this sort of area. Drop-based drops. Yes, I need confirmation. It's very messy. Price might structure up, break. Let me come out to another time frame and explain that. So there's the 240. So if you imagine we've got 240 candles coming up. This would be something like a 15-minute structure. So we might get you see this structure break here. Then we start getting this kind of thing going up. We need to draw the trend line. And if we get a steeper one like this, we need to draw the trend line. And when we start getting closes below, we need to have a target where that trend line is, you see, because it's going to attack that trend line. This could be a continuation to the upside. And if it breaks because the trend is down, then we have a target down here. And then if it continues, then we have a target. We can't manage a target low, we just manage the trade. Hopefully we get some momentum to the downside. Now, having said that, that might not happen. What we might have is a completely strong closed 4 hour coming down. Or let's have a look at the daily. Yeah, daily. I'd rather look at this, what we got in these daily candles, because we might pull back a bit and drop big momentum. So let's look at momentum, drop base drops. We've already got drop base drop momentum on the 240, on the daily I should say. We've got drop base drop here, momentum on the 240s, which is here. This is a base inside candle, drop, bit of a rally, base drop, very, very scrappy. So what would I look at for momentum? If the market's open and rally a bit, and then we get a close on the 240, where we've got some kind of wick, so it's rallied a bit, and then we get that close below the range, what's going on here, then I'm looking for the next candle up and drop, which is going to be on a 5 or 15 minute chart. So I'm looking for that. And if we're using momentum, you've got to manage the trade aggressively. So if we come to a 5 minute chart, and I'm going to clean that, and I'm going to reduce the candles, then you're going to start to see something like this. So first of all, we're going to have a load of 5 minute candles down. It's going to close on the 240, and then as them 5 minute candles are closing, you might have something like this, and it closes on the 240 here. This is the momentum level, drop, base, drop, because you might have something like this with candles. So then I'm looking for a pull on a 1 minute, a break of structure for entry. Stop should ideally be above here, but sometimes you can have it here if you want to be aggressive. You get stopped out, you look for the fake out, the trap, you're in again, and then as price drops, I want to be looking at this structure. The first break of this, which could be 1 minute candles down like this. As soon as I get a 1 minute candle here, close off at T1, and stop will go to break even. Okay, because what we're looking is possibly a fake up and then a continue down again, and then I would do this trend line down and start to manage my trend to the downside. It could be a 5 minute, a 15 minute, it could even be a 1 minute. It could really fucking plummet, and then I would take off one here, and then I would look at a very steep 1 minute trend line or 5 minute candle. Once the candles change, changing that structure, taking out highs of previous candles, then I might close my position off or take off a third, another third, or whatever it is, or 20%, and move my stop above that candle. And if I'm stopped out, then I'm out and I'm in profit. So this is momentum style trading, and this can be done on a 240 minute and a 60 minute and even a daily, you know, within a monthly context and a weekly and a daily context. You know, you can do these momentum style. The trade management is different. So you've not got no targets, you're just watching the structure, get out of first position, manage the trade to break even, watch the structure, new structure forms, draw a trend line, manage it that way, because you might be building momentum on a 5 minute time frame, which is a 60 minute candle. It might be on a 15 minute time frame, which is a 240 minute candle. This is why I like to look at the, let's clean all that up. This is definitely not just an analysis video, it's a very complicated lesson video, but I'm giving you lots of scenarios. So, I just want to make sure we got all that information in. Yeah. So I'm using the candlestick timing here, I'm using the chart patterns, the higher time frame candle, which is a lower time frame structure that you're going to manage. So I'm hoping that we get nice 60 or 240 candles. So think of it this way. If we go to the 240, we might end up all on Monday with big 240 close like this, 240 close like this, 240 close like this. And what you're doing is that's a 15 minute trend line. Okay, so you initially got out of target 1 somewhere here, and then you might have managed it on a 5 and got out of target 2 here. Then you start looking at 15 and you're going into the 240-minute candles, until eventually you'll get something like, and then boom, you're breaking above on a 240. It could be a fake out and it continued lower, but you've managed to exit your position there. You know, you can start to lean on a 60-minute structure, even the 240-minute structure, and manage it. So then you're looking at a weekly candle to continue. So you've started to trade very, very small and built it into a big position. So you've got another weekly close and you're carrying the trade over into the next week, and you're managing that final position from a simple 1-5-minute entry, and you're managing that momentum. But if it stops you out, you've got to reset and look at what's going on. You've got to understand, you've got to come back, look at the chart patterns, look at the higher time frame candles, lower time frame structure. So if we've got inside candles, which is not being mentioned on the YouTube here, but it's mentioned in the Discord group, we understand that we want to be playing near the extremes. Let's look at the patterns on a lower time frame, what the structure is. So what is the let's give you an example. If we look at this area, we've got inside candles. What is this structure on a 60-minute? Because this is a daily inside candles. So if I come back to the 60, reduce them candles, this was this structure. So this is where I'm looking at what's going on. I want to play at the extreme of that range of the inside candles. I'm going to look for traps, liquidity sweeps, and fresh and original levels. If I can put little set and forgets, or I'm going to use confirmation by waiting for the lower time frame to break a trend line, and then I can start to potentially look for double tops, head and shoulders, or possibly break of a trend line into momentum. So if I'm stopped out on this one, I might wait for this one. If I'm stopped out on that one, then I might that'd probably be it. If I'm stopped out on that one, I need to reassess and see what's going on. Then maybe there was an ABE on a higher time frame that I need to wait for. So you're locating these turning points or breaking points, or in some cases traps and fake outs and liquidity sweeps, which is what fucks people up. You know, so you need to understand that. You need to start to listen for a bit more confirmation, and off we go. Right, let's continue. Let's go to the Aussie. Let's make this nice and big now. I want to make the whole. So we'll use the pound again. So you kind of get the different scenarios that can happen, but the pound is looking more into potential momentum. But we could be faking out still here with that reversal, but I'm going to use the euro for that. Right, let's look at the Aussie. Let's go and move a little bit quicker. ABE, now you know what I'm kind of looking at. This is an area where I'm looking. This is a bigger than a monthly range potentially going on. But the pattern is starting to break down, but I can't really draw a trend line on this one because I've not made a lower low. Let's go and have a look on the weekly. Now I can on the weekly, A, B, E. So I'll be looking to short somewhere in that area. And if you think about it, this is just a counter trend trade breaking from this area here. So if you count the trend, nothing wrong with that because I'm looking at shorting up in this area, but this would be a target area. And I'll be managing it because it's counter trend like a momentum aggressively. Okay, not like getting in at the extreme here. Move my stop to break even at 50%. You're fucking joking. We're going counter trend. You know, it's different trade management. And what might happen, there might be a little bit of a liquidity sweep here and it might drop. So I need to look at potential fake out right here. So that's based on a monthly and a weekly. So let's have a little look what could happen as a fake out. Sometime this week. So let's drop to the daily. There's that range. I've already got a set and forget which it missed. Am I in it? That's a limit. It missed it by fucking peanuts. Look, this was in the Discord group on there anyway. It was just on last week's video. It's just sat there and I missed it. That was my extreme of the range. I'm happy for a set and forget. That's the reward to risk. I've got to cancel that one off on this particular broker. Each broker's got different longer term, shorter term that I look at, that I will fuck about with. Now I'm looking at the break of these structures, and we had a fake out here. because I'm waiting for a close below, and then I'm thinking this big range might be over, price might be starting to break. So I'm looking for breakouts of this momentum style trading, because I want to manage it aggressively as we're near a turning point. So I just want you to understand. So I'm going to delete this, because now we're going to go above the trend line. This is definitely a fake, but this is not fresh and original. I can't see nothing fresh and original on the daily. If I look at the 240, because remember we're looking at this area. If I look to the left, this is the level that's created this drop base drop. It's been here 1 2 3, but this is why I'm looking at it as a range. So if we look at initially, this is an A. Sorry, the A is the area of the start, B, and this will be my first high reward or high probability entry, but it's breaking that trend line, so I'm now going to remove it. It was matching an ABE at a ABE range. So liquidity sweeps above, I can't see anything fresh and original till up here, so I'm not even going to worry about that. Let's have a look at the New Zealand dollar. I'm not going to break down all the day stuff. I'll do that on the Discord. A, B, E's already played out. That was a big one. So if you got in an E here and it dropped like a ton of bricks, and you exit, you would exit your position here. Maybe you exit 50%, and then you want to manage it differently, following a momentum style trade, which means you want to see what structure is created here, and then you might have exited somewhere here for the second part. Whether you would have caught this down to here is highly unlikely. So we're in an original, well, it's a fresh level, not fresh, an original level, but not fresh. We touched it once, touched it twice. This won't be an ABE. Its probabilities are turning here again and getting weaker, so I look at this as being attacked. So I like to look. So if price was to come up and actually close above something like that, then I've got a upward AB and an E entry. Okay, A, B, so very bad, and E. So that's why I'm looking at for what I see. That's on a monthly. That's on a monthly. Okay, weekly, we've broken here. So this is a drop base breakout basing on the weekly, which could be a monthly inside candle if it closes. We're now on the 24th of September. So if this stays within this range, then we've basically got a daily range, okay, which you can see here. So I want to be short in here, looking for liquidity sweeps, and buying down here. Okay, but the monthly candle hasn't closed. This is what it's forming. So we could be reversing now. This is what could be happening. And if that is the case, we could end up with a wick and a green bodied candle. It's still down, but we're going counter trend on the monthly, counter trend on the weekly, but we'll be with the trend on the daily, which could be a flag. It could be just a ranged upside waiting for a break. Okay, we definitely broke the daily. We're into some higher time frame supply, and I'd only want to be buying near the low here, or if we break above, so we start to get a weekly close the next week, possibly buying up to here. There's room for it to move. It's counter trend. You need to use a different trade management, more like the momentum, because what happens when you tend to go against the grain, price can move pretty fucking quick and then snap back down. So momentum. Let's have a look at the weekly. Oh, we're into nice weekly supply level. Drop base. This is kind of momentum supply. Monthly supply. But we're breaking that weekly momentum of that structure down. We're breaking it. We broke it once actually, and then twice. So we're into monthly. We're breaking. If I expect to go long on the weekly, I want to pull back for what was supply becomes demand. We've got to close above this supply. So now price could create a inverted head and shoulders. So now I've drawn that in. Let's just say, come back to the monthly, I want to short a break of this structure. This would be one of my main target areas. I take off quite a chunk of position here, because we're now short in monthly, long the weekly. Which one's going to win? I don't know. Price does turn from lower time frames upwards, but you need to be in higher time frame areas. So let's look at this structure, because we could buy down to here. We could, sell down to here. Then we could look at buying back up. And if you're looking at going the opposite way, you need to be managing your short position very aggressively, because you want to be getting out if you're looking to buy, and you want to be managing that correctly and giving it room to breathe to continue higher. So what is this movement up here? Let's go down to the daily. Is this trend line? So here's a target. If we come down now and break, we're actually hitting the target area. I'm not really interested in shorting down here because I'm getting out of a position on a higher time frame. So then I want to be looking at going long. So I'm going to continue looking at longs, because this daily structure is creating this monthly candle, and we might break and go higher, but it is counter trend. So the safe option is to wait for the daily trend line to break. Then you're in sync with the monthly. At the moment, the weekly is up. We're closed above here. We've got this daily structure, and we've also got weekly 240 structure in here. So if we drop to the 240, because we don't know if it's going to reverse in that monthly, we're waiting. A good idea that the monthly daily is turning is if this 240 is taken out as well. Early warning sign. So you've got the daily that could get attacked, or the 240. So I know I need a target if I'm shorting somewhere here, somewhere here. Okay, daily and 240. Let me put that 240 back in. Refresh. So now I'm starting to map out using price action targets, and how much of a percentage would I like to remove at these particular targets. Let's go back to the daily. Remember, the daily is up. We're into monthly. We'll need the daily to break to know that the monthly candle's changing. We need the 240 to break to know that the weekly candle is changing. Okay, that's a rough idea. So if this continues up into here, I can keep going long until this 240 trend line gets broken. But now we might be moving fast and into higher time frame supply. What's my trade management? I'm going to start to lean a little bit more on momentum and breakouts. Okay, possibly traps liquidity on that one, because it's going to be rally-based rallies. Creates a lot of these with the ranges. And let's have a little look at that then. Let's go look at daily candle. Daily candle. We're going to close inside, first of all. Inside. Before I move to the 240, we've got an inside. Let's do the daily 60. We've got a range. That's what's going on at this moment. In fact, it's not so much of a range, but a chart pattern. But we'll put the low end in of the daily candle and the higher end. And inside of that, we've got that. Okay, inside. This is diddling in the middle. A, B, E, potentially to break to the high side. But we're diddling in the middle. We tend to get stopped out. I'd rather wait for this to break. And if that breaks, it looks like we're going short for all the day traders. And this is the extreme of the range. So safely, I would want something like this. Come down, break, possibly pull back, because what was supply becomes demand. Continues now and continues very fast, something like this. And we can draw that trend, and then we might have this trend. So this would be the break. So you might have a little pullback to enter, and you might have a target here of target 1. You might have a target 2 somewhere here, and then you're looking for the break to continue with the third target. You might use this as target 1 right here. Okay, you've broken, you might want this, but you're going to manage it very, very aggressively, because it's momentum to the upside going against this, but it's at the extreme of the daily. So you've got to add all these up and work out, right, okay, if I'm not, the target hit 1 here is no good, I'm going for this. I'm going to manage the first position very aggressively. As soon as it closes out position 1 by breaking below here, you move your stop. If it stops you out, fine, you have to reevaluate. Wait for price to come down lower. We might have a fake out here, and then we go long again. And then we might be able to have a target 1, which would be better, reward to risk, and then target 2 here. And then look for price to possibly break to that upside. That's how I would do that. And then the management, if we come up to that target 2, will probably be somewhere here, depending on the structure. So you're following the structure all the time. And then confirmation is the breaking of the structure. Breaking of structure. Okay, that's a confirmation. Then we can look for pullbacks to the double tops. You might have a fresh and original level in here because we might have some kind of drop-based drop. Okay, so then you're looking to do that. Then you're looking to draw your trend line in, and you know where you're going to manage it. And that's the way it is. It comes up and does all this. It's because we're diddling in the middle. Okay, so it's better to look for down here to long and short in here, and breakouts in the momentum direction above here. Okay, because then you're looking for breakouts at the break of. You probably can't keep up with this, and I'm kind of glad, because if people understood all this, you know, they take my edge away. We're breaking that daily rally base rally. Because we know that if we've got in here, like I said, at that extreme, and you've taken off 1 and 2, you can look for the break, and maybe you want to just manage that on whatever momentum on the 60-minute is moving up. So we look at the 60-minute, and it does break to the upside. And you've already taken off sort of targets down here, targets here, and it breaks. You might be waiting for this, and then you're going to draw that trend line and start managing your trade below the trend line until eventually that happens. And now you think, oh, there's an ABE to short. Maybe we can go, we're in sync now. It's a bit aggressive, but we're in sync now that the 60-minute structure's broken, creating potentially a daily reversal candle, but you're getting in, but you're using confirmation. And every pullback, like this pullback, you can drop down. This is a 60-minute. You can drop down to a 1-minute or 5-minute and wait for confirmation that way. Stop above. Work out your position size. Target 1 here. Target 2 maybe where the break was. And then look if it's going to continue down here. Which may well be the... Let's clean that up. Which may well be the daily low here. And then even down here, which is going to be the potential weekly low. If you've got targets, solid body candles, it's reversing. And then maybe it might even break the low here, and you're then managing it. If you want to leave a bit of position on, or trying to get in a new trade, you're starting to manage it like this. So you've got a downtrend line. And a very long term, pull up, pull down, hopefully, and managing it that way. So that's then moving from a low time frame into a high time frame. You need to start in these areas, like the high time frame areas, if you're going to do that. That's the dollar Swiss. I bet you all need to watch this video about 100 times over, and you're all going to be confused. But you know what? I want to get it out there. I want to show you, and I'm showing you confirmation. So let's have a look at the dollar yen. Dollar yen, we're definitely in this sort of up momentum. We've got areas of demand here, and it has actually closed below this demand. So we're into a range. I mentioned this for the last couple of months. A range bound market. The market and the trend is up. So if I want to go long, I want to really be above here now. But I'm looking to potentially short this. Okay, so how would I do that on confirmation? I want to know what the structure is on the lower time frame here. Let's go and have a little look. Monthly, daily. Let's look at the structure. Right, we've got a trend line originally down here, and its price is not touched. But there's a target area for starters. Okay, we've got this. By the time it breaks any of these, you're using a lot of reward. You know, you're taking all that reward out of it. There's a target. So there's one target. There's another target here. Now, what about this sort of structure coming up? If you look at that, it was broken. There was a little double top there. Range, close above the range, pull back to demand. Price is moving higher, but it's not the strongest of momentum. But we've got this going on at the moment. Since from here, we've made a new high. Price has pulled back, touch, not made a new high. So we've got this trend line under attack on a daily inside a monthly area. Okay, so we've got that trend line. It's removed all my bloody trend lines. Refresh it. So we kind of got that going on. Bit aggressive. I'd rather this sort of scenario be happening right inside that wick. So I'm not really going to look at leaning on this too much. There's too many trend lines to the upside. But if we go to a 240 and look at this, we've had a break of this structure. The only thing is, this is the most recent. Yeah, that's good. Close below this area of demand here, and we're in a range. Let's look. What's the range? Let's look at the 240. If it's ranging there, what's the weekly candle? Have we got inside candles? Yes, we have. We've got all inside candles here, but it's grinding up, so it's kind of a channel. But we've got this inside clean last couple of candles, so we're in a range on a 240. So that tells me then, quite with following rules, that I don't want to buy up here unless we break that range, and I don't want to be selling down here until we break that. And then we've got that turn that we was talking about. So this is already giving us an inkling that price could reverse, could continue higher because of the daily and the the daily trend lines to the upside. But if we're going to take aggressive short, which it will be, this is the area. What's this structure? So what's my confirmation on the 240? Let's go to 15. Refresh. Come on, come on, come on. Let's have a look at the 30. Back to 15, back to 5. Might be my internet dropped out for a moment. My broker don't like me doing this. Right, let's have a look at 60. It's not updating. Mode connection. Let's bear with me a second. Here we go. Update now. So there's a 240 break, which is this. There we go, that's the update. So we've got that. That's that 240 break. And this is the upper end of the range. And we're trying to work out what this is. Okay, what's going on in there. So let's have a look what happened, because we've definitely got a break of structure here on the 15. This is still got to be careful of target area. It's dealing in the middle, and this is the break of that structure. You see this area here, which is some demand that was in control, created a bit of a range, closed below, but we took out this supply in control. So if I was looking at shorting this is kind of that ABE that I would have been looking to short with my stop above this high, and it's been stopped out. So the structure was broken. This is too scrappy. There is another structure in here at this extreme that is very aggressive. But if we go to a 1 minute, let's have a look at that 5/1. Yeah, 1's too small now. So you've got all this kind of structure initially. Then there was a range. Then price moved higher from here, and it's broken this and created this area of supply that's been closed above. So this is a range, possibly fake out area. But because it's a range, if we go to look at a 5, let's have a look at 60. Are they inside candles? Let's enlarge this. Yeah, we've got 1, 2 inside candles. So now we know we've got the upper end of the range of that 60, and the lower end down here. So this is the little range, fake out into this area. I want to be looking at here and here on a 1 minute or 5 minute chart. 1 minute chart. Let's do a 1 minute. So we've got a 1 minute down this area. Remember, this is the range area that we're looking at, the upper end at the moment. Just going to highlight it like this. of this 60-minute candle and the lower end. So if I was looking for this to continue longer, we need to break that structure. And if we had just big red candles, I look for the first break of the candle high and the green candle close, and I'm entering. Okay, so we've got this break structure going down. So we need to come, and if it comes lower and then fakes out, there might be a better structure here, which means we need to break that structure. Target one's got to be here, target 2, and then target after the breakout for the high. If it closes below, because where we are at this potential, I mean, I would not be short in this, to be honest. I'm looking, you know, this could break, but I think we need to be a bit higher, because the monthly, the daily, let's look at the candles again. The daily candles are inside candles, okay? So shorting is a good area. Actually, it's not too bad, because we have got a decent amount of profit. There's a decent amount of profit there for that range, which is the bottom end. So yeah, there's a good reward to risk here. There's a good potentially to reach that target and then go lower. I'm starting to like this a little bit because of this rollover, and then we're into this range. If we break below or price rallies back up, this is what I'm really going to watch. So we know what happens when the market opens and closes. I'm not trading. Let's say it comes down into here, breaks this downward structure, continues something like this, and then we've got this nice tight 1 minute uptrend line, and it goes up into here, and then we get a 1 minute candle here. I would probably take that as an entry, my stop above. That's very aggressive, and if price hits this and starts to react, I would move my stop to break even and get out. If it removes some form of this, then I would not move my stop. I would let it try and come up to do that, and then we might have an ABE. You might not get the pullback, it might just continue lower, so you should be in it. So target kind of 1 is going to be very tight, maybe take a third off, something like that. Target 2, I would definitely be down here, and then you're going to start to move, and I'm going to clean that up for a moment. You're going to start to move in the break of this 1 minute here and start to move for this huge target 48. At the moment it's found about the 48.3 to the 47.4, so there could be almost 100 pip move there from getting in with about 2 or 3 pips potentially. If it continues higher, so we've got this upper area and we close above, we're removing that supply now, so we get a 240 close above. This is another scenario. So we start to get that after the market's open. It could be early hours in the morning. We've got a rally, base rally. We'd have to adjust the trend line to that, or even from here up and so forth. So you can draw them trend lines differently. But I'll be looking for the pullback to that basing area from momentum trade. That's the way I would be looking at that. You have to manage it very aggressively, but there is a chance that this could push deeper into this area for the next week. You could end up like this because the weekly candles are up, and then I'm watching this structure on a 240 or even a 60. So I'll be watching the structure like this to manage the trade. So we might be getting something like this on the 240. And we're watching that, and then as we get right near the high, I'll be managing on that structure whatever's in that on a 15-minute candle up near this extreme. And if it wants to break, we need really monthly close above that, weekly or monthly, then it might be off to the moon, because we're starting to take out this high. And if I remember, months ago, it wasn't this one, but there is loads of room then for it to take off after that. So anyway, dollar CAD, let's have a quick look. There's that range. We're moving down, bit of a rejection wick, but we're quite high. Look at the daily, we've got this level here. We've not had a really decent pullback putting a pivot, so I'm looking at this level could be creating a daily / 240 pivot. I'm only projecting here that. So that's my projection. If it's creating that pivot, we don't want to be above that trend line. Okay, and we've also got this. So the confirmation, because we're not sure where this is going to go, is going to be below here. The aggressive one is here because it's not a proper ABE. It's just this is where I'd be managing. If I got in up here, I'd be managing my trade somewhere at stop at break even already, you know, and letting see if that's going to go. So I don't want to be shorting up here if I'm already managed my trade from here, okay? Because this daily may well break and close above. So we get a daily close here, which is taking out that 240. We could be attacking this level to continue higher, which means we could end up with that trend line. We could end up breaking this area. So this is what you've got to look for. You've got to look and project all these different scenarios, and then we're waiting for the right strategy to use. If I go into a further analysis on that, we look at the monthly. This is a monthly flag as well, and the big picture is up here, but this is the flag on the monthly. So I'm quite high on that. It's going to attack and break, which is what I'm talking about, or it's going to reverse from here and target area somewhere there. Monthly, daily. Remember, if I draw the daily in, we are dropping. We are from a daily level, so I'm hoping that continuation, that's going to be the first pivot. But this could come up to here, bounce around a while, then drop, and you're creating a downtrend line. Then it could be the first pivot. So we're in some kind of daily range. Upper area, want to be short in. Lower area. If we come up to the upper area to short, we're potentially breaking that 240 here. You know, the 240 structure's down. We've got this. So it's very dodgy to try and short this until we're below that. And if you're in the trade, you want to be managing it aggressively, and I would just leave it alone until we start to break this, or you want to start going long with some kind of 240-60 structure. Let's have a look at the euro pound monthly first. This is that monthly kind of trend, close below, not below that level. Let's have a look at the weekly. Weekly is better. Yeah, ABE is already played out on this, so we can remove that. That definitely worked. We've got another ABE. It's a range. This is a nice area to look for short. We have got a weekly close, but we could end up with a bit of a fake and a drop. So drop-based drops, no longer fresh. There's no decent level here. We're in the upper end of that range. Let's just watch the structure here. So if I'm looking to short the upper end of the range, I want to be below that. If you want to be aggressive, then you start watching the 60 structure break. Let's do it from here. And if, because you're right at the very extreme, if you want to be really aggressive, you've got break already. But we've not removed any supply yet. Okay, and there's that range here, which is probably going to be a 240 inside candle. There we got it. Upper end, lower end on the 240. 1 moment. Turn that off. So if you're looking right extreme here of this higher time frame weekly level, and we've got a 240 inside, let's go to the 15 and use that range. We've got the range going on right here. Let's draw it from here. So this is the upper end of that 240, 15, 240 candle, lower end. So now, if you really wanted to get in and be aggressive, you're going to use a 1 minute, 15/1 minute. Too close to the market open, to be honest, because it's Sunday. But this is how I would be looking at it. So you're learning. Here's the structure to the upside. So if it goes up here and we get a close on a 1 minute below here, that would be an entry with stop above here. Target one here. Stop to break even because you want it to break to the downside. Okay, so I hope that makes sense on that. That's pretty much the analysis I'm going to do this week. Very long video. It's more of a lesson-based analysis video to confuse the shit out of you probably, but it's all based off of this. Okay, so who said trading was easy, huh? That's it, guys. Give us a thumbs up or give us a thumbs down if you really didn't like it. I don't really care anyway. I'm just trying to point out the truth, and I'll see you in the Discord group.